The market closed, and Friday, August 15, 2025, left us with a familiar narrative for Sound Hound Ai. A drop, a 5.74% decline to close the week at 15.59. But a single day's movement is just noise. The real story, the one every investor must understand, is written in the weeks and months leading up to this moment. It's a story of extraordinary growth, concerning profitability, and a high-stakes bet on the future of AI. The core question for every single one of you holding SOUN or considering a position is this: is this stock a high-wire act with a spectacular view, or is it a house of cards waiting for the next gust of wind? Let's unpack it all. The ticker tape, dissecting the recent price action. Let's zoom out from this Friday's close. This has been a year of massive volatility for Soundhound. We saw the stock touch a 52-week high of nearly 25, but it also dipped down to a low of just over 4. The current price of 15.59 sits right in the middle of this battlefield. Last week, we saw a glimpse of the excitement. Following its stellar Q2 earnings report, the stock soared, at one point jumping over 26% in a single day. The momentum was palpable. But as of Friday's close, much of that post-earnings exuberance has been tempered. The market, as it always does, is taking a sober second look. What does this tell us? It tells us that Soundhound is not a stock for the faint of heart. Its high beta of 2.77 is a flashing red light for volatility. It moves in an exaggerated fashion compared to the broader market. When the Nasdaq zigs, Sound zags with force. This isn't a stock you buy and forget. It's a stock you actively manage and understand. The catalyst. Why was there so much excitement? The Q2 2025 report. The single most important event for Soundhound this month, and arguably this year, was the release of its Q2 2025 financial results on August 7th. The report was, by all accounts, a blockbuster. Revenue growth. The headline figure was a staggering 217% year-over-year revenue growth, reaching an all-time high of $42.7 million. This wasn't just a beat, it was a blowout, crushing the Zacks consensus estimate of $33 million. This number is what fuels the bull case for this company, and it's what sent the stock skyrocketing. Narrowing losses. The company's earnings per share, EPS loss, narrowed to just 0.03. Significantly better than the forecasted loss of 0.09. This is a crucial metric, as it shows the company is making progress on its path to profitability. Raised guidance. This is the ultimate signal of management confidence. Soundhound not only reported a fantastic quarter, but also raised its full year 2025 revenue outlook. The new guidance range is now between $160 million and $178 million, a substantial increase from previous forecasts. These numbers are what investors should be celebrating. It validates the company's business model and its ability to monetize its AI technology. This isn't just a promise of future growth. This is tangible, verifiable, and accelerating growth in the present. The cold, hard truth. The profitability paradox. Now, for the reality check. For all the talk of growth, Soundhound AI is still bleeding cash. While the losses are narrowing, they are still very real. Negative profitability. The company's financial statements show a concerning picture. The EBIT margin is a shocking 175.3%. The pre-tax profit margin is even worse at 216.2%. Gross margin shift. The GAAP gross margin came in at 39%, a significant drop from the 63% reported in the same quarter last year. This is a point of contention for some analysts. The company attributes this to a shift in their business mix, but it's a metric that requires close monitoring. A company's ability to maintain healthy gross margins as it scales is a key indicator of its long-term viability. Burn rate. While Soundhound ended Q2 with a healthy cash position of $230 million and no debt, its operating activities are still a net negative, using $43.6 million in cash over the first 6 months of 2025. This is the burn rate. It's the cost of growth, and it's a number that will determine how long the company can continue to operate without raising more capital. Investors need to weigh this paradox. On one hand, you have explosive revenue growth. On the other, you have a company that is not yet profitable. The question is whether the revenue growth is strong enough and sustainable enough to eventually overcome the negative margins and reach profitability. The company is targeting adjusted EBITDA profitability by the end of 2025, a goal that would be a monumental milestone if achieved. The engine of growth, deconstructing the business. To understand SOUN, you must understand its business. It's not a consumer-facing app like a simple music identifier. It is a B2B, business-to-business player, and its revenue streams are a complex tapestry of partnerships and technologies. Automotive AI. This is a major pillar. Soundhound's conversational AI is integrated into vehicles from major global brands like Mercedes-Benz, Hyundai, Kia, and Stellantis. The company announced new rollouts in North America and Europe. This is a high-margin, sticky revenue stream. Once a car company integrates the technology, it's not easily replaced. The more cars they sell with Soundhound's AI, the more recurring revenue the company generates. Restaurant and Enterprise AI. This segment is experiencing massive growth. The partnership with Acrelec to power next-generation AI-powered drive-thrus is a prime example. The acquisition of companies like Sync3 has broadened its reach. Think about the potential here. Automating order taking, improving customer service, and increasing efficiency. This is a vast, untapped market. New product launches. The launch of Vision AI on August 8, 2025 is a significant development. This technology brings real-time visual understanding to its conversational AI platform. Imagine a customer pointing their phone at a menu and asking a question about a specific item. The AI understands both the voice query and the visual context. This is the kind of innovation that can unlock new revenue streams and applications. These are not just press releases. They are the gears of a revenue-generating machine. The $1.2 billion in booked backlog is not a projection. It's a hard number, representing future revenue from existing contracts. This provides a strong level of predictability and confidence for investors, even in the face of current losses. The elephant in the room: competition and market position. Soundhound doesn't exist in a vacuum. It is in a hyper-competitive space, going head-to-head with giants and well-funded startups. The giants. The biggest competitors are, of course, the big tech players like Google Assistant, Apple's Siri, and Amazon's Alexa. These companies have near-limitless resources. However, their models are often consumer-focused and generic. Soundhound's strength lies in its specialization and its B2B focus. They build custom, highly accurate, and low-latency voice AI solutions for specific industries. The niche players. Other players like DeepSeek, a Chinese AI company, and Big Bear AI are also vying for market share. As an investor, you must constantly ask, does Soundhound have a sustainable competitive advantage? The company believes its proprietary technology, superior accuracy, and rapid response times, low latency, set it apart. The backlog of over $1 billion suggests that their customers agree. The key to Soundhound's survival and success is not just fending off competition, but securing strategic partnerships that embed their technology deeply into a client's ecosystem. The automotive and restaurant deals are a testament to this strategy. The analyst's viewpoint. What the experts are saying. Let's look at the Wall Street consensus. Analyst ratings for Soundhound are mixed, but lean toward the optimistic side. As of this month, a consensus of analysts has a buy rating on the stock, with 50% recommending hold and the other half split between buy and strong buy. The average one-year price target is around 14.25, with a wide range from a low of 8.08 to a high of 18.9. The fact that the stock closed on Friday at 15.59 above this average consensus indicates that the market is already pricing in a certain level of optimism that may exceed what some analysts are comfortable with. This suggests that the stock could be overvalued in the short term, but it also shows that sentiment is strong. The bull case for analysts is clear. Soundhound is on a path of explosive growth, is winning key partnerships, and has a clear runway to profitability. The bear case is equally clear. The company is not profitable, faces stiff competition, and is trading at a high valuation with a price-to-sales ratio north of 60. Final verdict and investor action. So, what should you do now? As a wise stock market advisor, I will not tell you to buy or sell. I will tell you to think like a professional. Understand the volatility. This is not a retirement stock. It is a growth stock with extreme volatility. Be prepared for wild swings. If you can't stomach a 10% or 20% drop in a day, this is not the stock for you. Focus on fundamentals, not hype. The Q2 report was a massive success. This is what you should be paying attention to. The revenue growth, the narrowing losses, and the raised guidance are the data points that matter. Monitor the path to profitability. The single most important metric to watch going forward is the path to profitability. Will they hit their target of adjusted EBITDA profitability by the end of 2025? If they do, the narrative will change dramatically. If they don't, expect investor sentiment to turn bearish quickly. Keep an eye on the competition. The AI landscape is a battleground. Watch for news from competitors. What new products are they releasing? Are they gaining ground in key sectors? Think long-term. The real story of Soundhound AI won't be written in a single quarter or even a single year. It's about whether they can scale their technology, grow their partnerships, and become a dominant force in the conversational AI market. If you believe in that long-term vision, the current volatility may present opportunities. Soundhound AI is a fascinating case study in the modern market. It's a company with a compelling technology, explosive growth, and a daunting challenge to achieve profitability. The market is weighing these factors in real time. On Friday,